If you are a trader that is actually struggling to identify high probability supply and demand zones, watch the video because I'm going to show you a great tool you can use that will help you locate some of the better zones, some of the better opportunities when it comes to looking for these aggressive areas of buying and selling within the future markets. Okay, so I know we're into a new year, 2025. Market conditions are always changing, but if you pay attention and have any experience using the volume profile, yes, volume is extremely important when it comes to trading. We need to be able to identify those key areas where the market likes to pull back to. You have valleys and peaks within a volume profile tool or indicator, right? So what happens is that when the market moves away from an area of high volume, okay, and it taps into, say, a low volume area, it likes to pull back or reject that area and pull back to key areas of high volume. And then if they break through a high volume area and then tests a low volume area, it may want to pull back to that high volume area, say above. So for example here, and I will say this before I even get started, showing you, the volume profile. Some of you probably are already familiar with it or not, but structure is important. So, I'm not using this particular tool just to help me identify zones, but I'm using it in a sense where I am looking at maybe a leg for an opportunity to where there's aggressive area buying at a specific zone, supply and demand. And then I'll draw up the tool to see which area makes sense based on a leg or movement, coming back to a zone. So if we pay attention here, what we can see is that there was a low that was created right here, right? And then the market started making these higher highs and higher lows. So it was creating structure as it was pushing higher, right? So we have a major high resting right here, and we have a major low resting right here, okay? So you have to be able to see that. If we have a major low sitting here, and then the market starts breaking structure higher, we have a major high resting up here, then the market starts pulling back lower, well, you could have supply zones resting above you, right? And always keep in mind what's at the lower portion of a leg is going to be that major area or that major low. If we break this low, then again we'll have areas where we can pull back to look for key areas of supply. Sometimes within a leg itself, as the market is making these higher highs and higher lows, it could create a major a major low or major high, kind of in between or in the within the leg itself. Like this area right here, if it breaks these lows right here coming to the downside, that's a major low right there, because this is created more so a major area structure as it's pushing lower here. It's taking out a major area structure right here. So that's why when the market pulled back here, this is a key area of supply right here, what you to project it from in today's trading session. Okay, now keep in mind that this is also a major low resting down here. So when the market came down there and took that area out, again, like I said, there's supply areas where you can look for opportunities to go short, right? So again, looking at structure overall, we can see coming out of yesterday's trading session, we were breaking structure lower, making these lower lows and lower highs. Always look at your higher base chart, whatever that may be. I'm using range based charts, whether you're using time based or ticker volume. You can still use this this particular strategy, which I talk about so much here on the channel, using zone within a zone approach, meaning trying to find multi-chart confluence. Okay, so for example, I want to show you here as the market was pushing back to the upside today. All right, well, as it was making these higher highs and higher lows back to the upside, all right, it took out an area structure right here. Okay, pushing higher. So there were once it starts breaking structure to the upside, meaning making higher highs and higher lows, and we shift structure. I talked about that in yesterday's video, where you can identify basically a trend reversal in the market. So when the market makes highs, higher lows, and it's taking out a good area of structure, it could be a minor area of structure back to the upside, but it has to make a higher low, push higher. So basically we got the low down here, it pulls back, we made a higher low right here, and then it breaks structure back to the upside, taking out this area here. Now, okay, we've got an area of demand. Okay, so where we were once looking for opportunities to go short, we can now go long, right? But this is where the volume profile comes into play. This is how we can seek out those high probability supply and demand zones. All right, so pay attention here. I'm gonna draw up and show you the two. So as the market's pushing to the upside here, we break above an area structure here, you should be able to identify key areas of aggressive buying that pretty much aided in the structural break right above this area here. So we have one right here, and we're talking about high probability setups, okay? And why? And what makes that? That's one where we have an imbalance or gap resting back at our zone that we've drawn up. So if this is my my demand zone right here, I can see that there's a gap resting right here between the top end of the zone itself and this candle right here. The first candle that breaks above in this case here, the last bearish down candle from, after we've drawn up our box, the first candle that breaks the upside of the box, the next candle here that it comes back this far with the wick, but it doesn't come all the way back to the zone. So we got an imbalance resting right there, or a gap back at the zone. Okay. So we wait for the market to pull back to that aggressive area of buying right there. Why do I have two zones drawn up here? One on the inside. The bigger one, the larger one, the blue one, is the 120 range demand zone. I always start with my higher base chart first. The smaller one, which is the yellow box, that's the 24 range demand zone. So it's a multi-chart confluence looking for a zone on the inside of a zone. So a lower base zone sitting on the inside of a higher base zone. All right. And why is that? Why do we want to do that? Trading's all about confluence, for one thing. So the more confluence you have resting on your side, the greater the opportunity and chance that the trade is actually going to work out in your favor. In this case here, we have our first area of demand right here. We have our second area of demand right here, okay, the lower base chart. But we also have 18,900, which is a round number. So we have three means of confluence right there. Now, if I draw up, using the volume profile tool, just simply doing this right here, this gives me a better option, or not better option, but a better view of what volume looks like in this particular leg right here. So I always talk about, when it comes to the volume profile and, looking at an actual leg, okay, when the market was pushing to the upside, this would be like the 50% area. This would be basically the 76, the 100% area here. So most times wherever the trade actually started at, or originated at, or initiated at, with the buying to the upside, which took out structure higher, that's pretty much where we want to look for the opportunity, our greatest opportunity to take a trade from. And that's down here, and it did reject this area. But it also rejected the upper portion of this leg to the upside as well. We never know where they're actually going to stop. That's one thing you have to understand. Nobody has a crystal ball to be able to determine 100% where they're actually going to start. This is where the volume profile indicator or tool comes into play, because it gives me an idea what volume looks like at certain zones, in a sense, and looking at the profile. So when I draw up the profile over this leg right here, I can see we got a nice area of volume surrounding right here, a nice area of volume surrounding right here, and then we also have some volume resting down at the lower portion where things kind of kicked off at and started. So when the market retraces back and taps in and touches the first zone, this is a high volume area. It pulls to the zone, both the 120 comes into the 24. We're at a high volume area here. We have a lot of confluence resting right here. That's going to let me know that this is a good high probability location to look for a trade going back to the upside. And that's pretty much how I use, the volume profile when I incorporate it into my trading. Now, the market reacts here, as you can see, when it rejects this area. It goes from reacts right here, basically at 900, and goes all the way back up to 962. So it's about a 63 point move in this trade setup right here. Okay, then the market eventually comes back down, pushes lower, taps the second zone down here. Okay, way down here. We also have a high probability setup here, zone 120 demand zone, and there was a 24 range demand zone resting on the inside of that zone, so multi-chart confluence there. But if you also look here, we're at 18,750. That's a half number. So we have three means of confluence there as well. We have volume resting right here as well. The market comes down, taps the 120 zone and taps the 24 range demand zone as well. We've got everything we need to look for an opportunity to go go back long. Okay. Now, why was these two areas, or why was this both of these good opportunities? Well, okay, because where we were breaking structure to the downside here, the market shifted after making this low. Okay, so this low now is a major low resting right here, because we're starting to break structure back to the upside here. It could come down here and take out this low here. If it does, then it broke a major area of structure, coming to the downside, making it a major low, and we can look for a pullback to a key area of supply to go short. Just as it was making higher highs and higher lows here, it took out some area of structure right here, so I was looking for opportunities to go long. I just want to show you how powerful, how impactful the volume profile tool how it's so versatile, how it can work in your favor if you really know how to use it the correct way. Volume is extremely important because without it, the market doesn't move. You have to think about that, all right? But that's really all I have today that I want to talk about, and looking at, incorporating today's trading session as a whole, just looking at things. Yep, we had a low, a major high, breaking structure, pushes back, and now we have a new low resting right here as it push back or retrace it back to the upside. It looks like now we got a new major low. It could break this area, come to the downside, and again, like I said, we could look for a nice area of pullback, which it looks like it may come down here and do that. I would be aiming for maybe somewhere up in this area here. If it breaks this major low here, this would be a nice area of supply. We have one resting right here above. In this case here, there'll be situations where you have like a major breaker structure and then the market pulls back and you have multiple supply zones. It can react here and it can react here. But again, like I talked about earlier, this is where you need a pull to figure out like the leg of a swing that broke structure. So if I was to use, for example, just say the Fibonacci retracement and it broke structure, say somewhere right here, again, this would be like the 50% area somewhere up in this area here. As we get up in here, we're getting around a 61.8. So I'll be more interested and look for an opportunity up here. Now, and the reason why is because there's our imbalances or gaps back to this supply zone here. There is still a small imbalance or gap resting at this supply zone right here. So both of these are valid zones to take trades from. Above us, the gaps or imbalances have already been filled back to any zones that may have been created before. So this is definitely a good area. This one, which I would be more so eyeballing this, but it can react off of this area here on a pullback and continue going short. Again, we don't know which one they're going to stop at. They could stop at both, but we don't know which one they're going to actually stop and reject that. But that's all I want to share with you guys today. If you're interested in receiving and watching the video content, which is a lot of video content covering the trade breakdowns, these are videos that have helped so many traders out, and it can possibly help you yourself as well. And I want to say thank you for all the individuals that are part of the Elite Channel Supporter Group. Thank you for supporting my efforts as not only as a trader, but as a content creator. And that's what one of the perks that I give back is creating within that private community of video content. It's all the trade breakdowns, the video playlist, a great video that I covered surrounding market structure, all that for just $6.99 a month. That's like 24 to 25 cents a day. That's all it is, pennies on the dollar a day. So you get all that additional private community video content, which I would really say is very valuable, because that's where kind of the substance to how I trade really all comes together, because I talk about, in those videos, these are trades that I've taken and posted over on our Discord. I go back and do video content surrounding them where I break down these trade setups as if you're sitting right next to me, talking about structure, talking about stop loss placement, talking about profit target areas, going so much more great detail as if like you were sitting right next to me. I'm talking to you directly through this video content. I am breaking the trades down as I, kind of see it through my mindset or through my own view, through my eyes, right? So this is what has helped so many individuals out, because it's like being able to go back and understand why I took the trades, okay? And there are a lot of those videos there on the trade breakdowns already, which is part of that Elite membership program. So if you're interested in becoming an Elite member, the link is down in the description portion of the video. Scroll down, you'll see two links. The first one is the Discord. The second one, which the Discord is free. The second one is the Elite membership supporter link. Once you click on that, make sure to choose the second tier for $6.99 if you're interested in joining, because I go in great detail about the strategy. All right, the strategy is not complex; it's pretty simple. But I do go into these trades and I break them down for you. All right, but that's all I have, guys. I appreciate everyone who is continuously watching the video content. Trust me, if you spend time watching the video content, you can also educate yourself as well. But if you're not a current subscriber, please take the time to go ahead and sub by clicking on the subscribe button. Make sure to turn on all your post notifications by clicking the bell. And last but not least, if you found value in today's video, make sure to click that like button, that thumbs up button for me. I would definitely appreciate it. Take care. See you in the next one.